So we're providing the capabilities and the engines into the financial institution, and then they're using a lot of that technology to power front-end journeys. We were really starting to see the evidence that pretty much everything had to move towards digitization and automation. The exciting thing for us is when we see some of the very simple application front ends that just make it really easy to understand for an end customer what they're doing, why they're doing it, the benefits, being sold a product, and then 3 months later thinking, what the hell did I buy that for? I think that change of conversation is still really an opportunity for the industry.
Welcome to Investology. My name is George M. Ferris. I'm a reformed banker who used to sell derivatives, alternative investment, and other sophisticated products to institutional clients across Europe and Asia. But that doesn't mean I was recommending them to my friends and family. This is my channel to discover how to deliver better outcomes for investors through technology, innovation, or just common sense and critical thinking. I hope you enjoy this conversation. Welcome to a new episode of Investology. We're exploring the future of wealth management with my guest, Ross Milward from Quantifeed. Ross, hello, nice to meet you.
Great to see you as well, George. Really looking forward to the conversation and being a pleasure to be invited.
So you're the CTO co-founder of Quantifeed, and we'll explore what Quantifeed does. It has to do with software engineering and quantitative finance. But I realized as I browse your CV that we were at Deutsche Bank at the same time when you were director, head of equity derivatives technology Europe. We didn't meet, but it was the same years. And I think perhaps that's a good point to start, because I see your background as a software developer, but also we talk about quantitative finance. And, we had previous guests where we talked about quants, but maybe we can start from that, and then that should lead us into the combination of those in Quantifeed. So what was your role from, developer to quant developer to of equity derivatives technology?
Yeah, that was a wonderful, informative set of years. I actually started my career in Australia, in Sydney, working at Deutsche Bank, and we were building risk systems and trading systems, market-making systems for equity derivatives. My starting point was more from a computer science background, but I really enjoyed learning and understanding about finance, the way the markets worked, and then being able to leverage technology into solving sort of the business problems. And then I had the fortune of moving to London, working on the equity trading desk in the quantitative research team. And, that taught me several things, but one is this nice mix, what I think of as a continuum of skill sets, from the computer science on one end to the mathematics on the other end, and over time, sort of the convergence in the middle. And so through those experiences in Sydney and London, from both building platforms as well as then helping build the pricing algorithms, et cetera, for structured products, I then moved to Asia, sort of in a management role within technology for equities and equity derivatives, to really sort of build out the end-to-end sort of trading platforms. And I guess these were some of the ingredients and the beginnings for applying those patterns, when I left banking and thought about starting this company with Alex, the other co-founder, to apply that to the wealth space. So yeah, very fortunate in terms of that learning on both the computer science and the research side.
Yeah, and we're going to get to Quantifeed, but just to dig a bit further into that, I'd like to try to understand a bit better roles, because we talked about quants, but like I said, we've interviewed quants before, and then and I guess quants are typically, also developers, where at least they can do stuff, Python and stuff like that. And then you said you covered it from a computer science angle. So can you tell us a bit more about, the difference and how those two converge?
Yeah, certainly during those years, a lot of the products, particularly the more complex ones, we called off-system. The vanilla products were very much on system in the sense that there was a risk platform, there was a trading platform, it was flowing through to the back office. But many of the more complex products were off system in the sense that they were living in Excel. And obviously behind the use of Excel, there were the sophisticated pricing models that would generally be deployed as C++ add-ins, for example. But as we were scaling the business, really that individual plug-in model couldn't scale. So I think where we sort of could help is how do you take some of the patterns and architecture and be able to really scale out structured products in sort of a more flow-like nature. And so through those years, particularly at Deutsche Bank, when they became very successful in the equity derivative space, similar on the fixed income side, there was a lot of growth around variance swaps and other products that really leveraged sort of that architecture. So I think it was applying the software engineering practices and architecture on top of the quant models, which was a nice combination for the team at the time.
I see. That brings back memory because I was in this equity derivative that became the investment products team. What I remember vaguely is that I think I could see the evolution. Basically, in sales, our interface was the structuring team, and we're communicating with the quant team. But I also remember that towards the end, I would also have access to the pricers and stuff like that. And therefore, I could be more proactive with the clients or, figuring out ideas and stuff like that. So we could imagine that the next step would be to give the clients the interface. We're not doing that, but maybe that's the next step. Is this what someone else from Deutsche Bank, like me, as sales, would see as an evolution?
Yeah, exactly. I mean, I think, when you're doing the structuring and you're pricing a deal for a client, as that starts to turn into the live trade and you're risk managing that and really then all of the cash flows, et cetera, around that, and you're having to do that at scale for thousands of clients and thousands of positions, that's where you really have to build out a big architecture and a strong architecture end to end. So you're exactly right. You were touching the beginnings of that workflow between the structurer, the quants, the trading desk, all the way through to the middle office and back office, et cetera, for the management of it.
Right. And I'll bring back one more memory, even older. When I was in Singapore and I was in FX trading, and I saw this evolution where I thought our job was pretty dumb at the time. We were kind of manually quoting prices on the Bloomberg, and people would hit the bid or the ask, and we would confirm manually. Gradually, the spot became e-trading platforms that we had, so we don't have to call it. And then we gave it to the customers, and then eventually, but we're still trading the options, etc., manually. And eventually, in FX, this has become simply, in terms of a link between the risk book of the bank and the customer, this has become one platform for many years now, and every possible option, etc., is kind of one click. And therefore, this will bring us to Quantifeed potentially. But it's a realization for me that the work that's gone behind the scene and the roles of the people, such as yours and other people,
and how it all fits together in the complex jigsaw.
Exactly.
Yeah.
So let's go now to Quantifeed. And I see the company is about 12 years old. Can you tell us what led to its birth and what was the big idea?
Yeah, I mean, when Alex and I met approximately 12 years ago, we keep rounding down because it feels a lot quicker than that. But we were starting to see, coming out of banking, sort of also this recognition of digitization. We touched on it with this. I actually also think in parallel, not only when you think about sort of the derivatives growth that you and I were particularly involved in, but in parallel, the electronic trading, moving from high touch cash trading through to high frequency trading, that evolution in parallel, we were really starting to see the evidence that pretty much everything had to move towards digitization and automation. It's a very obvious statement, but we realized that there's so much to do. Even in 2025, we still amaze ourselves with just how much automation there is to do, with the clients and the opportunities we have ahead of us. So that as a basis, sort of Alex's career and my career in banking was in parallel. But then also we were starting to see from the US in particular, the idea that investors, so end customers, mums and dads, the likes of you and me, were starting to get advice through digital means. Now, obviously, the sort of first term of that was called robo-advice. There's been some very good success stories from a B2C perspective in the US. But to us, it was more about seeing that end customers at sort of a retail level could start to get useful investment ideas for longer term, rather than being sold sort of product, more about what are the goals and what are the aspirations and how can you invest longer term. And so that really appealed to us. With Asia, given we're headquartered and started the company in Hong Kong, we're also seeing the growth of mass affluent, the fastest growing sector globally, from really people starting to move up into that segment where they did have some money to invest. So I guess it was a combination of those things that started to create this idea that there was something we could do out in Asia.
Right. Can you tell us, well, first, I see you serve different segments of clients. Can you tell us about that and how it works for those clients?
Our key segments are banks, asset managers, brokers, insurance and platform companies. If we think about banks from a retail perspective and a wealth perspective and the private bank perspective, in a way, they're one of our main segments. We help them provide these investment experiences and investment journeys. We're very much a B2B company. So we're providing the capabilities and the engines into the financial institution. And then they're using a lot of that technology to power front-end journeys to their end customers or to the advisors. Asset managers are servicing the same institutions as ourselves in many respects. And they also need the capabilities and tools to scale when they think about the building of model portfolios, being able to take their instruments and be able to structure those into solutions that are good for the institutions and for their own customers. We provide a lot of tooling for them. And then it's the same with brokers. Brokers are quite interesting from a business perspective. They're very transactional. They make money and commission from volume of trades. But a lot of people and a lot of institutions are looking to how can they get paid by assets. And again, this fits this model that I was talking about earlier, where we saw that this change to be able to help end investors save for the longer term, and the solutioning and the recommendations coming from those institutions, they should be rewarded for that rather than just more of the traditional churn, particularly that we were seeing out in Asia.
Could you take an example of a customer or a segment and tell us how it looked before, or what changes when they start implementing your solution?
Yeah, I can maybe give you a couple of examples and then maybe also how we see it evolving. The first example is maybe just to follow on with what I said earlier about the inspiration we were seeing from the US. Definitely for wealth managers and banks, the ability to give the end customer, along with their savings and check account and maybe simple investment journeys through your mobile application. We're powering investment solutions that include regular savings plans that start to incorporate goals so that an end customer can set up an investment journey through that application. And then we will go from the original suggestion through to the fulfillment and all the way through to the position management, nudging the end customer on what they should be doing next along that journey. I think that's been very successful for us. We've got some very large clients in Asia and in Europe that are using this type of platform. One of the things we saw very early on in our first set of customers was there was a little bit of resistance from the end customer because it was a sense of, I've got a lot of cash, or I've got some cash sitting in my savings account. I don't know what to do with it, but I'm a bit scared to move a big lump sum across to this investment product. So what we're now innovating on is rather than do everything at once, how can you move the customer over time to get to a strategic asset allocation that is recommended by the bank, normally done at the CIO level of the organization and can come down through to a tactical level. But how do you slowly move that customer? What's the next best action along the way to improve the health of their portfolio so that it's giving them more diversification, it's giving them returns as they do regular top-ups? You're seeing that growth of the investment over time. And so we're getting a lot of traction with that. And I think that's really exciting for us, for our clients, and ultimately for the end customer.
Ultimately, I think that's the ideal case in terms of wealth building and the challenge, right? Because there will be a lot of noise, there will be a lot of pitches saying, buy this product. But in an ideal world, we have this long-term view and we know our assets and liabilities and goal, and it all makes sense.
Exactly.
But, like you said, even if we have this idea going from point A to B, is a journey, and it's something I want to explore further. But before that, I just want to make sure I understand this change from your customer side, so the broker, the wealth manager, etc. What were they doing before? What were they using before? Was it Excel spreadsheet? Was it their own systems? And then how they implemented?
Yeah, in some respects, the investment product that was being offered to the end customer, I would say, was quite naive. Here's a list of 100 funds or ETFs or stocks. Particularly if you think about wealth, it was often, and in Asia, it's often skewed to funds. So it would be a journey where maybe an advisor would have a list of 100 funds. This is the favorite fund of the day or the month. And then they'd be calling to the customer to say, hey, you should buy this fund. With very little context of why the customer needed that fund, how is it helping the holistic, investment view of the customer, etc. And I think then to answer your question further, that's that process of calling, these are the 100 funds, but you should choose this one. That would be then very manual. It would be using things like Excel, it would be sort of booked manually. In some cases, particularly in the last 10 years, there'd be fax orders going from the bank to ultimately through to the asset manager. So really, I think in all of the steps between the end customer, the advisor, the internal operations team, the asset managers, etc., there'd be lots of manual steps and many band-aids. Now, where I think we've managed to fit in very well, we think of it as the middle. We touch sort of the front end and the back end as well. But there's a whole suite of orchestration in the middle that wires up the front-end journeys into being able to do that fulfillment and then orchestrate the execution in an STP manner out through to the back-end execution custody systems, depending on asset class, etc., and bringing that back and then being able to provide that holistic view to the end customer or the internal operations or the portfolio managers. So, yeah, along the way, we're very much trying to work with our clients to automate and upgrade some of these legacy processes and in some cases legacy platforms.
Yeah, this incredibly long and complex life cycle of a trade, right? If you start from the idea, the order books, the clearing, etc. I forget a lot of them until it's booked and also it comes up in the report. So this is what you're tackling almost end to end. Is that right?
Correct. Yes. And to link it back to your first question with our shared experience at Deutsche Bank, in some ways, the life cycle of an order, and a trade all the way through to the risk management and position keeping, there's different levels of sophistication depending on, the asset class and the size of the institution and the trading strategy, etc. But if you distill it down into some of the simpler sort of building blocks and the steps through a workflow, there is quite a lot of similarity. And so I think that's where we've, taken our experience, and built a great team, obviously, with that experience as well, to then be able to deliver this into the financial institutions we work with.
Right. And how does it work, the transition from, let's say, the old model that you described to a Quantifeed powered approach? How did they come on board? How they started implementing this?
Yeah, definitely. When we started the company, we were very conscious that to sell into financial institutions across multiple geographies, different regulations, different appetites for being cloud versus on-premise, different systems that we would have to connect to, we realized that we had to have a pretty flexible architecture. Within QEngine, the platform that we sell, we have an internal core that provides all of the common capabilities, the algorithms, our intellectual property that we continue to build and license. But then around QEngine, we have the concept of connectors, plugins, and APIs. And it's that outer layer. We build up a set of common connectors, that sort of service different protocols, things like fixed messages, REST APIs, message buses, etc., security. But then with APIs and then with connectors, we're able to work with front ends that we've developed ourselves or that the client has developed themselves. And then the connectors can, work with the existing CRM systems that the institution has or the existing core banking system. There's a requirement on market data. So often, we're working with the data providers as partners to also feed in, historical prices and intraday quotes, etc., to really sort of power the engine. I think that's been a very full approach that allowed us to scale. Without that recognition very early on in the company, it would have been sort of difficult to pivot into this model if we'd started more from a B2C, for example. The other element of that, and we see it with every client we speak to, is the hosting model. I touched on it just with the cloud, but we definitely have a set of clients where we're managing the infrastructure really as a SaaS, style of platform, and we can scale that up with sort of the modern architecture around Kubernetes, etc. But, there's still very much clients that, want the infrastructure and the application running on-premise, in their own data centers. And as I said earlier, that might be because of their own preference. Often it's to do with how much, private PII data there is, or, there is specific regulation to keep the data in country, the maturity or otherwise of the cloud providers might not be there in that specific country. So it's a very fascinating sort of problem when you think about having the need for that flexibility, and ultimately that becomes a business enabler for us.
Yes, I'll share this slide about QEngine that you have on your website, and indeed it's very simplified, but as you can see, there's really multiple layers, and it's fascinating area of, let's say, financial data from front to back. There's so many layers, and now from what you're telling me, there's also very different implementations, and it will be very different if you run it on-premise, etc. So I guess that's where your background, and that's where the software engineering, the building of this engine comes into play. And from what I gather, from the name Quant, I thought, this is very much about quants finance, the models that run behind it. But now I understand how much software engineering and solutions from account, investment, position, trading, ledger support, etc., is coming into play, and how basically that creates a multiple, how to say, so some kind of a tree of options. Is that the way to describe it?
It certainly feels like a hierarchy or a tree when we're drawing out the architecture and working with our clients on the integration. I'd like to think that a lot of that is hidden from what we're trying to do with the end customer. The exciting thing for us is when we see some of the very simple application front ends that just make it really easy to understand for an end customer what they're doing, why they're doing it, the benefits, providing that transparency around this is how to invest and why to invest, and do that in a very simple journey to hide that complexity of fulfilling that order when we think about mass rebalances across hundreds of thousands of positions. that the customers have and making sure that runs well. But really, we ultimately are delighting the end customer and also providing the tooling to enable the advisors to give the end customers more informed advice.
Hi everyone, a quick post. You might know me as the host of Industology, but I'm also the founder of Orama. It's a podcast studio mainly for fintech and financial brands, and we produce multiple podcasts, including Embedded Finance Review, which I think might interest you if you are in this world of fintech, because embedded finance has so much potential. And the podcast is hosted by Lars Markel, who not only interviews experts in the field, but is an expert himself. So those conversations are really bringing a lot of added value. Check out Embedded Finance Review. You'll find a link in the podcast description as always. And now we're back to the show.
As we're looking forward, right, there are some themes that are very important for the industry. And one of them, when we talk about data, is Gen AI. Potentially, there's a lot of hype as well around the topic. But you must be thinking about this question. How do you approach it, and what's your take on it?
I mean, without doubt, changing, a lot of what all of us are doing, even if I think from a company perspective, and when we think of development, all the way through to marketing, we are leveraging AI more and more in our daily work. So, and I think that's the same for the clients that we're working with. They're going through that same change, that's sort of same adoption. And then when I think more specifically about how we can help the advisors, I'll start there. I do think there's a lot of opportunity for the AI tooling to provide information and bubble up information in a different form of interface than the current user interfaces that a lot of these platforms have. And to me, if you link that to the underlying algorithms and you link it to the automation that I talked a lot about earlier, then I actually think that combination of the AI sort of leveraging the underlying algorithms, the data, can really then enable good usability. So an advisor logging in at the start of a day, instead of them navigating and looking at what to do, you can be sweeping with agents saying, well, look, there's been a movement in a set of customers' positions, or there's been a change in a particular fund price, or we've just had the strategic asset allocation from our CIO group has just been imported and it's impacting a set of clients. Being able to bring this information up and the AI interactively being able to work with the AI, I think the co-pilot name from that perspective is a very good one because it really means that it's sort of providing that assistance. I think there's a huge amount of value to it. And obviously, we're starting to incorporate areas such as that. I mean, there's also, I don't know if traditional is the right word, but I even think some of the machine learning algorithms, anomaly detection and other areas, when we have quite complex systems with a lot of data, how do we incorporate that into exception management? So if we're really striving for straight through processing and automation, but when things go wrong, how do we identify that as a platform quicker before someone from operations does manually so that we can raise those alerts earlier to be identified? So there are a couple of the key areas. There's all sorts of elements that we're looking at to really enable advisors. I think the one thing, and links back to the end customer, is obviously the backdrop of this is still regulation. We need to make sure we never forget that in this context. Ultimately, all of this still has to provide a really good level of transparency and justification for recommendations and that sort of partnership between the financial institutions, the licenses they have with the regulator, and the responsibility to the end customer. So I think it's always caveated with that. And that's why we work very closely with our clients on discussing and getting this right balance as we begin introducing AI into the platform.
Yeah, that's a very comprehensive way of looking at it. And I must say that I'm always looking at the hype. There's obviously a huge hype about AI. And I could say that the temptation would be to slap AI on everything financial and without security. But from what I observe, and perhaps that was my initial doubt when I looked into the area, is that actually people are doing it in a very reasonable way, and regulation plays such an important role because if unregulated, people will push the boundaries. And I guess that's unlike what we've seen, for example, with crypto, where people were evolving outside the regulated space, and there's been a lot of people were pretending to be regulated and they weren't. So I think there's an interesting comparison here. I mean, we're yet to see what happens, but I'm positive that it's done the appropriate way.
Absolutely.
Looking at trends, another thing that I see, not just emerging, but really as a fundamental way, is the appetite and what we call the democratization of private assets, individual investors able to access what was previously only accessible to LPs in very large institutions. Do you see that as well for your clients? And is it something that changes anything on your side?
Yes, it's really interesting. And I do think this is something we learned along the way, particularly in the first few years of the company, that our original sort of vision was really to help retail and mass affluent get the access through sort of digital means to the benefits that the human advisors are giving, the private bankers are giving to their end customers. And I think the starting point is, how do you provide some of the simpler advice with some of the simpler products, such as funds and ETFs, etc. But more and more we saw, actually, it's not that one sort of segment is so separate from the other, because as someone moves up in wealth, then they sort of tip into the next bucket. Some of the products that start more complex, and things like private assets and structured products and bonds and other things, they're definitely without doubt coming down. And I think that's been our approach as well. How do we continue to build an engine that is relatively asset class agnostic, provided we have the valuation data and sort of the partnerships with some of the back-end providers to be able to roll up some of those holistic views from a portfolio level, and then from a fulfillment perspective, be able to connect through. We've definitely had success now at all levels of the segment. We've got clients that are in the private bank that are managing more complex products, much larger AUMs, all the way through to individual customers placing $100 and working out where that $100 should be asset allocated to at a really small fractional level into funds. I do think fractionalization, asset to private markets, all of these evolutions that are impacting the wealth ecosystem touches us. I don't think our intent is to do everything. In fact, it's not possible for anybody in this ecosystem to do everything. So I do think that partnership model where, we can work with the experts on the data or the valuation of structured products, etc., fits really nicely for us. And when we work with our financial institutions, there will often be one or two of these partnerships around data and product, etc., that we work closely with.
Yeah, I reminisce a lot on this podcast, but that also reminds me of a conversation I had with Alokik Advani from FISV, Fidelity Investment Strategic Venture.
As you and I have spoken about before, I still believe that advice journey is somewhat broken, and there's a lot to be done there. And it's still, till date, nobody's been able to fix that perfectly.
This model of pushing products or going on the phone and figuring out, maybe try this, try that. It really needs to evolve, and how tough it is to make it evolve, and how eventually the solution could be technological. That brings me to the fantasy fintech question. In an ideal world, there's no constraints. How do you see wealth management evolving in the coming years? And I think we've got a lot of hints there, but maybe you can paint the whole picture for us.
If wealth management can be more accessible, I think you used the word, democratize, that would be wonderful. And if it can happen earlier in life, where people are building their wealth over time, there's obviously a lot of stress in the global system around aging populations, obviously the burden that's putting on pension funds and superannuation, the government, etc. So I think obviously the earlier people can invest for longer term and that can grow, I think that's a wonderful thing. So by bringing these sorts of tools into the hands of the end customer, into the hands of the advisor, when there's that relationship, etc., I think is kind of the vision for us. And it always feels like we're at the start line. I think there is always so much more to do. The industry is continuing to change. I think it's at an exciting time for us where we're seeing a lot of momentum in terms of people realizing now is the time to start this journey. Obviously, COVID and some of the last couple of years with sort of uncertainty around the economy and everything has slowed things down. I would say it's without doubt ramping up and it's needed. And so I think that democratization for all of us would be wonderful. And for an advisor to sit with me and have a solution that I then work towards with that person over months and years, rather than being sold a product and then 3 months later thinking, what the hell did I buy that for? I can't remember what that product was. I think that change of conversation is still really an opportunity for the industry.
Yeah, absolutely. And I realized that a small-time investor myself who obviously has tried to have this more reflective approach and think of portfolio, etc. But it's very hard, right? It's very hard to figure out their portfolio if you got different assets, different brokers, and to think like, how does that fit in a portfolio? I don't have a lot of data or things like that enlighten my decision-making process. So I totally get it. And as we now reach the end of this, I'll reminisce one more time about, as I see that you launched the company pretty much at the same time as I left the industry. And one of the reasons I was leaving is I was a bit disillusioned about the fact that financial innovation was mostly leading to, products that were leading to more margin. And I'm not criticizing too deeply the work I was doing, and perhaps we were connected somehow at Deutsche Bank selling those structured products and stuff like that. But I can see, that really makes me very positive about this whole aspect of fintech, what you guys are doing, and how those technology solutions are real, the innovation that need to bear results. This has been a really enlightening conversation, Ross. Thank you so much. Would you like to add anything as we conclude?
No, wonderful, George. Thank you. Yeah, and I mean, we've been very fortunate, I think, in the last decade or so, as you said, coming out of the industry and, being able to build an absolutely wonderful team, get some fantastic clients and, help shape an industry, I think is sort of very, very fortunate and really sort of appreciated. And again, thank you so much for having me on. It's been a really fun conversation and hopefully valuable for everyone.
I'm sure it was. Ross, thank you so much. And we will put the link to follow Ross and what Quantifeed does in the description of this podcast.
Thank you, George.
Bye.